Hey everybody, welcome back. Son of a Silver Stacker here. Today is March 12th, 2023. There's a big story I got to share with you. And well, it's SilverSqueeze 2.0. Here we go. I just got to show you. This is remarkable. And it all started from what happened on Thursday and Friday last week. And I'm going to take you through the steps and show you what's what. And you can take it from there. So let's get over here down to business. First things first. Huge shout out and a big thank you to all of our channel members. Really appreciate all of y'all. Now over here to JM Bullion. Looks like gold ended the week at 1876 even, Steven, kind of flat, right? Look at that, down 1 penny. Silver, 0. That's flat. 2077. Platinum up 1826 on Friday and 979.48. And look at that, palladium was also flat at 79 cents, down 79 cents right there. 1437.46. Interesting day on Friday. And check this out. What's even more interesting? Yeah, check this out. The premiums on the American Silver Eagles. If I'm at 35.06 and I do the math here, 2077, you're looking at a $14.29 premium. We were at 14.64 on Friday morning. This is huge. This is huge. This is huge. This is a big move. I haven't seen a large move like that. I don't even think in over a year. So this is a big deal. Something's happening. And what's interesting, this couldn't be happening, I believe, at a better time. Oh boy. Now, let's go over here to the United States Mint real quick and show you what's what on the American Eagle bullion chart. Okay. No new tail to tell for any of the precious metals, right? So let me go ahead and move over just a little bit more so you can get in there with the silver. Yeah, no new tail to tell as far as sales for bullion at the United States Mint. Now, this is goldsilverbitcoin.com, and this is dated March 11, 2023. That was just yesterday, okay, folks? Title of this article is Silicon Valley Bank, SVB, collapse could be the beginning of the second Great Depression. Really, that might be just her hyperbole. But there's some interesting things going on here that we need to recognize, and I've highlighted them, okay? So here we go. Off we go. This is by Ryan Elliott, March 11, 2023. A Silicon Valley Bank branch in Manhattan called the police today on techno investors trying to withdraw cash as fears of a bank run forced regulators to seize assets. Yeah, that's pretty scary, right? So New York-based entrepreneur Brad Hargraves said that the failure of SVB would have a massive impact on the tech ecosystem. Did I just jump too hard into that? Let me back it up a little here. The Federal Deposit Insurance Corporation, that's the FDIC to you and me, today seized SVB's assets after depositors, mainly technology workers and startup companies, staged a bank run following a shocking $1.8 billion loss announcement. Yeah, whoops. The bank took a hit during the pre-market, its share price plummeting 66% before trades were suspended on the market, right? So investors are insured just for $250,000, and already horror stories are emerging, okay? This is huge. Ashley Turner, CEO of the Boston-based wellness company Farmbox RX, said she has a minimum of $10 million in deposits at SVB and has been calling her bankers like crazy. She said, and it has been the worst 18 hours of her life. I guess she put all of her eggs in one basket, so to speak. Now, let's get into this. This is huge. New York-based entrepreneur Brad Hargraves said that the failure of SVB would have a massive impact on the tech ecosystem. Well, that's just one little picture right there. Now, SVB was not just a dominant player in tech, but were highly integrated in some non-traditional ways. A few things we'll see in the coming days or weeks, he tweeted. Wow. So tech ecosystem, right? And everything evolved around it in the periphery, in the satellites. This is amazing, folks. I've heard that some of the royals could have even had a few $1 million in this bank as well, and they might lose that as well, okay? Now, SVB's failure came less than 48 hours after the bank disclosed plans to solicit, right, to ask for $2 billion from investors to offset losses of $1.8 billion worth of bonds it sold, liquidating them to cover the deposits that had been losing. Yeah, I imagine they're not the only banks that are going to be losing deposits, right? And there's a very, very specific reason for that, and I'm going to get to that here in a second. This is huge, folks. Now, the announcement of the plans to solicit $2 billion spurred fears of a bank run. You know, if your bank's asking for money, yeah, I would say I would get the hell over there as quickly as possible, right? Pushing the company to bankruptcy as customers withdrew deposits at a furious rate out of concern it was facing insolvency. And after 2008 or 9 or 7, I think people are pretty sensitive to that, right? Says here, the federal agency insures each depositor for at least $250,000 each one, right? In addition to its one New York City branch, SVB has 17 branches across California and Massachusetts, according to the FDIC. Now, depositors who had funds over the insured amount of $250,000, here you go, were due dividends over the coming weeks, as well as a receivership certificate for the remaining portion of their funds that were not insured, which would be paid for by selling off the bank's assets. What? Yeah. Yeah. Hey, how much does that computer cost over there? And how much is that chair? Oh, and can we take some of the fixtures and sell them at auction? Yeah, everything's got to go, right? Oh, my goodness. Earlier on Friday, SVB suspended trading in its shares until the announcement, having fallen up as much as 64%. Falling down, falling up. Either way, it's all bad in pre-market trading following a roughly 60% plunge in the prior session. I'll get to it over here, folks. I'm already 6 minutes in. SVB said it was seeing deposits. This is the reason why this happened, folks. SVB said it was seeing deposits decline more quickly than it's expected because its customers, right, mostly tech and healthcare startups, what? Healthcare companies too? Huh? That can't be good. We're increasing their expenses while fresh injections of venture capital dried up in a rising interest rate environment. There you go, folks. So as things cost more money, you're not going to be depositing as much money in your bank account. And listen, this is not only just for banks that do business with businesses, that's also retail businesses, I would imagine, okay? Think about that. This could have huge, far-reaching implications, all right? Now, the failure of SVB Financial could destroy an important long-term driver of the economy as VC-backed companies rely on SVB for loans and holding their operating cash, tweeted Ackman. Now, what that says to me is they're going to be bailed out. But if these, because listen, they may not get bailed out, but if they do get bailed out, that's kind of a backstop for other things happening, right? So I think that's what's going to probably happen here is that there's going to be a bailout for this particular one. Because if not, I think there's going to be some kind of domino effect. It says here the firm's assets and deposits have almost doubled since 2021. That's a rapid amount of growth. And the bank has been putting a lot of those funds into U.S. Treasury bonds and other government bonds. And I think that's probably an interesting move, and that should be asked about. But with rising rates hitting tech startups, the bank's primary clients, dwindling deposits force SVB to divest from its bond holdings, which meanwhile plummeted in value due to rising rate environment. Yikes! It's just like serendipitous how all of these variables they all happen at the same time, right, to make this happen. Yet SVB's predicament has drawn comparisons with previous bank runs throughout the U.S. history, some with catastrophic consequences. Catastrophic means instantly, right? No calling 911 to get to the hospital on that one, right? That's like instant. Right, catastrophic. A bank run is when customers withdraw deposits rapidly. I'm going to start rapping from a financial institution out of a concern that the bank may go under. And if a precipitous drop in deposits drives the bank into default, well, this may be self-fulfilling. Yeah, there you go. And that has happened in the past, okay? The beginning of the Great Depression in the early 1930s was marked by large numbers of runs on commercial banks. Commercial banks, that's what I'm talking about, retail banks, resulting in panics which worked calamitous effects on the economy. In 1931, the New York banks in the United States collapsed during a bank run. It had over $200 million in deposits at the time, equivalent to $3.8 billion in today's dollars. And the collapse set off a series of runs on other banks. That's the domino effect, folks. Now it says here, and I'm just going to try to wrap this up because there's just so much good stuff in this particular article. The turmoil at SVB triggered market selling in peers with similar exposures this week, with shares in First Republic, which is headquartered in San Francisco, falling 16.5% on Thursday, hitting their lowest point since October 2020. The situation has also raised fears of widespread market contagion, right, spreading onto other sectors, as the S&P 500 banking index fell over 6% on Thursday, its biggest single-day sell-off in over 2 years. Now, the top 4 U.S. banks, JP Morgan Chase, Bank of America, and Wells Fargo, as well as Citigroup, saw their stock prices fall 4 to 6%, wiping out $52 billion of their combined market cap on one day, folks. This is huge, huge. And one implication, we don't even know yet. We don't even know what this is going to mean yet. We have to wait till the dust to fall is settled. Now, the fall of the big four, though smaller by percentage, pulled markets down, with the 5.5% drop at JP Morgan Chase carrying 5.4% rather, carrying a larger weight than any other S&P 500 stock. The SVB turmoil follows testimony by, here we go, another reason why the turmoil follows testimony by Fed Chairman Jerome Powell this week, in which he said that the central bank will probably have to increase interest rates more than expected in response to recently strong inflation data, and I would imagine the jobs numbers as well, right? Now, the tumult at SVB has already caused investors concern over the health of other U.S. and European banks. What? It can spread over to another continent? What? Yikes. That's global. The S&P 500 banks fell 6.6% Thursday, and selling off key European lenders Friday weighs on the region's benchmark index. Yikes. Now, if you're not happy with this particular article at goldsilverbitcoin.com, you can go here to Reuters, and it's nice and distracting with pretty colors and things and videos, and wow, neat. And they even got a really cool chart here. Silicon Valley's bank failure is first since 2020, and they even made a special chart just to show you one on the whole chart. I think that was really cool. Now over here, bam, this is huge. This is how big this is, folks. The Fed's going to hold an emergency meeting on Monday amid SVB's swift collapse. Yep, indeed they are. And I will leave a link in the description for this here. So if you go to the Federal Reserve Board, okay, board meeting, ding, 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 March 13th. That's mañana. Expedited procedures. They're making this thing happen fast. That's an emergency. Now, let's do a little bit of looking into SVB, right? It says SVB, proud to be on Forbes' annual ranking of America's best banks for the 5th straight year, and to have also been named to the publication's inaugural Financial All-Stars list, Forbes 2023 America's Best Banks. I don't know if they're the best banks of 2023, but I did go over to the Google machine and I looked it up, and it says IBOS Association member bank Silicon Valley Bank has been recognized as one of America's best banks in 2022 by Forbes. Forbes has published its 13th annual America's Best Banks list. Yada, yada, yada. And what does that all mean? Absolutely, I have no idea. But if the 5th best bank in America can tank like that within a day, what does that say about the rest, right? Yeah, catastrophic, right? Remember that word we looked at? Catastrophic. Yeah, wow. Now, what is this doing? Why are we even talking about this, right? Why are we talking about SVB here, Stacker? What's going on? What does this have to do with anything with gold or silver? You got to ask yourself, right? Well, I'm glad you asked, because check it out. Here we go over here to Twitter, and this is Mike Gill, right there, hashtag SilverSqueeze. And he's compiling data from APMEX. He's compiling data from LME, LMBA, all these folks that deal with precious metals. And he came across something yesterday that you need to know about, okay? This is huge, huge, all right? As of 7 p.m. Pacific time, estimated track sales of silver and gold at APMEX now total the largest Saturday in all of 2022 and 2023. And on top of that, I've never seen them add so much inventory on a Saturday, and yet it's all being gobbled up. Yeah, I'm telling you, I'm really excited about this, because check this out. Because they're adding inventory, it's on sale. You don't believe me? Check this out. I got to show you. Bam, let's go here. Oh yeah, who else? Who's buying precious metals? Oh, here we go. Central banks buy gold. Central banks, and this is the Google machine, folks. It's really just central banks buying gold. Quick little search. Central banks added a whopping, yeah, look at that. Look at that. Come on. 1,136 tons of gold, worth some $70 billion to their stockpiles in 2022. By far the most of any year in records going back to 1950. Folks, if the writing isn't on the wall, what is? What is on the wall? What are you looking at on the wall? Are you not looking at this? Are you not looking at this? What are we doing here? Because check this out. This is, if you don't like that article, if you don't like that Google blurb, go here to CNBC. It says gold demand surged to an 11-year high in 2022 on colossal. Look at that word, colossal. Doesn't get any bigger than that, does it? Central bank buying. Yeah, seriously. And you want to see some sales? All this is happening at a time when American Silver Eagles are finally on sale. So here we are, I believe, at the SilverSqueeze 2.0. And what are you doing, folks? Are you also doing the SilverSqueeze this weekend? And is your bank open on a Sunday? I don't know. I don't think mine is, unless it's in certain locations. But isn't this interesting? This is all happening, right? This terrible economic news and a financial collapse at a time when silver's on sale. Who knew? How amazing. That's just incredible. Now let's go to those plus ones today. I'm talking my mouth off. Proverbs 11:24, there's one who scatters and gathers more, and one who refrains from what is proper, only for loss. Now, basically what I believe that's saying, and it's been translated for me, money spent on doing the Lord's will bring additional wealth, but refusal to contribute to worthy causes brings a loss. Yikes. Now let's head over here to 3 nines, fine 99.9 KOIN Coin News Radio. This is Over the Hills and Far Away by Led Zeppelin, and I don't think everything is going to be over the hills and far away. Stacker out.